Hello, this is Michael Beatman with your Gateway FS weekly wrap up for Friday, February 11th. On the Chicago Board of Trade this week, March corn was up 30.5 cents, March beans were up 29.5, and March wheat led the way. It was up 34.5 cents on the week. We did have a USDA report out this week, out on the 9th, and initially it looked to me like it was bearish just because the USDA came in with above trade estimates on corn and bean stocks for the US, and then on the world they did that as well. So on the face, that is typically bearish just because the trade's thinking there's going to be less supply, and the USDA comes out and says no, there's actually more supply. That's not what we saw. After the report came out, everything stayed high, and actually even went higher on the bean side if you're looking at beans. And so that just got me thinking and talking. Whenever I talk to a lot of you guys, we talk about fundamentals. And so I wanted to go back a year. It's ironic that a year ago, the USDA also released a report on February 9th, but this is 2021. And so comparing the 2 years, let's start with the US. We see that compared to February 2021, February 2022, we have 40 million more bushels of corn in ending stocks. We got 200 million more beans, and we have about 180 million less bushels of wheat. Let's go over to the world now. So again, 2021 to 2022, the USDA is saying that the world has 617 more million bushels of corn. They're saying we got 348 more million bushels of beans, and about 955 million less bushels of wheat. And then let's talk about the prices and what the prices have done last year on February 9th to today, or to the 9th, a couple days ago. So looking at the futures, not cash price, but futures. March futures 2021 to 2022 on corn were up 94.75 cents. So we're 94.75 cents higher on the Chicago Board of Trade this March than last March. Flipping over to beans, we're up $1.8125, and then looking at the March wheat contract, it's up $1.4825 year over year. And so wheat, that does make sense, right? Because we have lower stocks and the world, quite a bit lower, a significant amount lower in the wheat stock. So you would expect that to be higher. But the corn and the beans are higher, and we have higher stocks. So I got to looking around, and you guys have experienced inflation this year with input costs, right? And so at least the number I found was that the U.S. created about 20% of all currency in existence last year. And so you look at the increase in these prices, and what do they equate to, year over year? And it's about 17% higher on corn, 13% higher on beans, and 22% a higher price on wheat. Again, that 20% number is very interesting. It's not necessarily going to be exactly equal to the amount of money created, but you are talking about commodities. So it does react to price that way. And so if you create more money, it might be less valuable. And so that's why you can see, and you can kind of rationalize why these commodity prices are up here. To me, it kind of has a little bit of, I guess, as a safety net, like if we do decide to head down here, like how low can we go, given that fact that there is a lot more money floating around out there. And then also to the upside, just looking at the percent increases, I've been telling guys, I think corn needs to go higher, but after running these numbers, beans need to run a little bit higher just to catch up in percent terms and what they're up compared to what corn is year over year. So I just thought that was interesting. And again, this is just looking at 1 year last year compared to what's going on this year with the USDA reports. So as always, if you have any questions, please feel free to give myself, Adam Parker, or Phil Sally a call at 282-4000. Thank you.